Welcome back to another instalment of the GBPUSD March 2021 forecast. Today I'm going to be analysing the GBPUSD market, which is going to be massively influenced by the jobs report coming out in the US tomorrow, along with speeches from the Federal Reserve. However, we have already had some really important fundamental news in the UK annual budget release yesterday. I'm going to explain this as well, and on the technicals we are sitting at around 1.39. We've bounced off a really key level of support, and this has left plenty of room for upside. Okay, so let's look at the fundamentals from a sterling perspective first. And yesterday we had the UK budget release, as some of you may know, and I just wanted to say the key takeaway from a sterling perspective. GDP in the UK is predicted to return to pre-crisis levels in Q2 of 2022, which yes seems quite far away, but this is 6 months ahead of schedule. Now, experts have said the budget that was released, a more fiscal stimulus, it was seen to strike the right balance and support this spring recovery that we're seeing. Now, this reassessment of UK growth, in my opinion, is going to be supportive of the sterling in the long term, but also gives me confidence in buying the sterling in March. In general, I've said this before, the UK are vaccinating the population at a really impressive rate. Barring any unexpected news around new strains, the optimism around the UK economy is still there. I don't see this changing, and I see more pound strength as a result of this. Now, moving on to the US fundamentals, where we have this rapidly growing story around the US Treasury yields. And the yield on the benchmark 10-year US Treasuries, that traded at around 1.5% overnight, heading back towards that 1-year high of 1.6% that was set last week. For anyone who doesn't know the reason for this spike in the yield, investors are betting on a stronger economic recovery. This is aided by fiscal stimulus. It's going to result in revived inflation. Now, what this really means for the dollar will massively weigh on what the Federal Reserve has to say about all of this. Now, most Fed officials, they've downplayed the rise in Treasury yields in recent days. However, there is a key speech today from Jerome Powell. Now, what to listen out for? Comments that he's monitoring events in the Treasury market might be enough to calm things down, encourage a weaker dollar again, which we're much more used to at the moment. If he shows no concern, this suggests that the Fed is actually happy about this situation. This could trigger another spike in US yields, more dollar strength. Really important to listen out to this speech today. That's at 5 p.m. UK time to see what kind of way they're going to go about this. After all that, we have this small matter of the jobs report tomorrow. For those who don't know, on the first Friday of every month, there's this employment statistics report. It's released from the previous month. It's always interesting in any climate. It's particularly interesting in the climate at the moment because the US economy is said to add 185,000 jobs in February. If this is true, or if it's actually higher than that, this whole recovery trade that we're seeing, an increase in yields and dollar strength and stocks falling, this could spill right into March, and we could see some more damage there. If it's less than anticipated, we could see a return to what we've seen in previous months. Okay, so I'm on the chart now, and I want to give a buying opportunity and a selling opportunity, because what is said in the Federal Reserve speech, as I said previously, is really important. And so I'm a bit neutral for this pair at the moment. I am bullish for the sterling in the long run, but I'm not counting out the USD at the moment, especially with the rise in Treasury yields, etc. So I'm on the daily chart now, and this is kind of reflected in this price action that we've seen over the last couple of days. A lot of consolidation there. So I want to mark key levels. Obviously, we touched out at around 1.42, and I do see us breaking that in the long term. Probably not in March though. For buying opportunities, I'm seeing potentially this last piece of bearish pressure before we had the break to the upside, and we had this break of structure here, which I'll mark as our BOS, our break of structure. As you can see, price has actually gone into this level a couple of times now and rejected it nicely. Now, if I zoom in on the 4-hour chart, what we can see quite clearly is this daily break of structure coincides with our daily level, coincides down to the 4-hour as well. And if I zoom in this daily order block that I highlighted can now be shrunk into an area just that small. Now if you see, we had this bullish impulse to break this structure. We topped out, as I said, at around 1.42. Price action came back down and tested this 4-hour order block. Now I'm quite annoyed at this because you can see this little orange line that I have, and this was actually, if I go onto the 1-hour chart and scroll all the way to the right, I actually had an alert at this level here. Let me move that right across. And look how close we came to touching. Now, this is a 1-hour order block. Look at this huge bullish impulse from this level. Now, this is a 1-hour order block that hasn't been tested. It came in to test the 4-hour. There may have been an entry on a lower time frame, but I'm still holding out for price to potentially run from where it is at the moment, at around 1.39, down into our 1-hour order block. Then I'll be looking for buys. From these buying opportunities down in this 1-hour order block where I've set my alert, my take profit levels would be up at around 1.4. That's a nice psychological level as well, where we might see some resistance. It's roughly around these equal highs. If we can break above that, then we do have this inefficiency, which is probably clearer on the 4-hour, which it is. And so we could have a take profit around about 1.41, 1.408 to be precise. That would be my picture for buying opportunities, so a run back down into this level. And if it was to react off to this alert that I've set, this 1-hour order block, then it would represent a failure to make a new lower low, which is another bullish sign. Now I'm going to remove all of these drawings and look at the picture from a bearish perspective. Now I'm on the 4-hour chart now, and you can see actually this level, arguably this level, definitely this low as well, were all broken, and I'll highlight them for you. Three clean breaks of structure, breaks of lows. And where did that move come from? It came from this 4-hour order block here. So I'm just trying to paint a picture with GBPUSD at the moment, and we marked that buying opportunity where we could be testing roughly these levels and these inefficiencies. But what would be great is if price did run down into that, we got our buying opportunity, and then we looked for sells up around here as well, because I do think that March could be a period of more consolidation. There's confusion at the moment around the Treasury yields and stuff. Hopefully we have some more guidance on that from the Federal Reserve. Now I'll highlight this as our 4-hour order block. So if price was to run up into this level, we could look for selling opportunities. Now I will shrink this down into the 1-hour chart to try and get a more refined entry. And as you can see already, this 4-hour order block that I highlighted can actually be shrunk into a smaller area. And if I go even further down into the 5-minute, where did we have our first break of structure? So the move that was up here didn't create much. There wasn't anything mitigated there in my opinion. What I am looking for is something like this. From that level on the 5-minute, we had this break of structure, which I'll highlight for you. We had this one as well. And to top it off, this low. So this is a really bearish candle, or influence, shall I say, And if we was to look to sell from here, and I scrolled across, I deleted the fact it's a 4-hour order block. You can see where the chart gets a bit messy with all the lines and the breaks of structure. Really evident from a choppy market at the moment. So this is around a 10 pip stop loss, and I'll take profits. And if I go back onto the 4-hour, we could actually target the lows around, or a 1-hour order block for a really big target around 1.38, but more than likely this low here at around 1.39, 1.4 would be another good level, as we know it's a key psychological level. So at the moment for GU, I'm a bit neutral. I do like the fact it's reacted nicely off of this key support level. If I go on to just quickly on the moving average, let's look at the 50-day EMA on the daily chart. So we're actually trading quite far away from it at the moment. It's been respecting the 50-day EMA since November, and so it makes sense for price to continue to pull back into our 1-hour order block here. That's the situation I would like to see. Let me know what you think, guys, in the comments. I'm always happy to hear other people's opinions. Other than that, keep subscribing. The channel's growing really nicely at the moment, and it's great to see everyone jumping in on the comments. Please like and share this video as well, and I'll catch you all for the video next week on Tuesday. But be sure to listen out to the Federal Reserve speech today and the jobs report tomorrow. Cheers, guys. Take care.